Hello, this is Brian Shannon from alphatrends.net. Today is Monday, the 19th of April, 2010. Let's take a look at this S&P 500. We've gotten a lot of news here recently. Obviously, we're in the middle of earnings season, or it's just starting out, and we also had the big news out of Goldman Sachs, or regarding Goldman Sachs on Friday. Well, the market has held up very impressively, and it's good to see that this market is as resilient as it is in the light of a big downward move that we had seen on Friday in Goldman Sachs, and also the earnings related selling that occurred in Google. That the S&P 500 has really held up very well, and it goes to show that you always want to give the benefit of the doubt to the prevailing trend. And obviously, the primary trend remains higher. We have a rising 50-day moving average, but more importantly, on a short-term basis, we can see we have the rising 10, which is red, and blue, the 20-day moving average, which was tested as support today. Now, early in uptrends, we often see that the 10-day moving average will act as support. As the pullbacks get a little bit deeper, it becomes the 20 and then later on the 50-day moving average. But right now, we still have a very healthy market. We have this trend line that is also held, which is right at that 50-day, or I'm sorry, 20-day moving average. And when we back it up again, just for bigger perspective on the weekly time frame, we're still in this fantastic uptrend, which has still come still a little bit shy of where it had broken down real hard in late 2008, and also that Fibonacci level, which is from the high to the low, a 61.8% retracement would basically get us back up to the scene of the crime that we had broken down from, which is near that 123 level. So the market is in an area where we might expect to encounter some selling in here, but right now really we have to look at it as being impressed. If we take a look at something called the volume weighted average price, that's this gold line here. Now this takes into consideration all of the volume at price for the SPY since Friday and today Monday. Well, what happened on Friday, we had the volume weighted average price. The market was below that as we had a fear-driven sell-off. Well, today, later in the day, we had seen that 2-day volume weighted average price get violated back to the upside. So the market had taken back control. The buyers had taken back control of the short-term emotional move that occurred on Friday. So I think that's very important to recognize that since the event, the Goldman Sachs event, we can take a look at the 2-day volume weighted average price for Goldman Sachs as well. What this says is that the average price the stock traded at in the last 2 days is about 162 and a quarter. So anyone who sold below that level obviously is not feeling good about their purchases. Anyone who bought below that level is now in the money, giving a little bit more short-term confidence. Now, Goldman Sachs is what I consider to be a broken stock, and it's probably going to need to heal time-wise, so not the best stock to be trading unless you're a day trader. But back to the S&P 500, what I think we really want to see happen this week is that we want to see this 118.50 level hold as support. That's the basis of the 20-day moving average and that trend line on the daily time frame. If we can hold above there, I think that we're going to see more sideways digestion of these gains. But if we can recapture this 120 level, which is where we now see that five-day moving average, that's the orange line, then the buyers are going to be feeling a little bit better about this market again. And it goes to show that, again, you want to give the benefit of the doubt to the buyers. Always have your risk management in place. But the market really overall remains healthy. Maybe we just need to digest a little bit through time here.